Welcome back to Money Talk. This is the part 2 of our weekly review for the week ended July 31st, 2026. If you haven't watched part 1, which contains the heatmap review and the top movers for the week, the link is in the description. Go back and check that. That will be very helpful in understanding what we're talking about here. This part is about the stories behind the markets. We've got Otedola spending 222 billion naira in one stock. We've got MTN releasing a massive profit of 707 billion naira in 6 months. And we've got the market falling despite all this positive movement. By the end of this video, you will understand why. Now, let's go into the nitty-gritty. The first story here is the Otedola story. Femi Otedola has increased his stake in First HoldCo to 25.9%. Last week, remember we said it was at 20.4%, and we projected that the movement in First Bank is linked to his purchases in the previous week. This confirms our thesis. Now, let me say that again. He acquired 222 billion additional shares. This is on top of the 1.2 billion shares he already accumulated in the previous quarter. This is the sixth consecutive week where Otedola accumulation has been one of the dominant force in the financial services sector. At 25.9%, we need to stop calling that a trade. It is conviction on the part of Femi Otedola. The question is, what does this see in First HoldCo? First Bank is one of Nigeria's oldest and largest bank, and when someone with a banking knowledge of Otedola is acquiring, there needs to be something driving his conviction to go into the stock. However, one thing to watch is percent. Every additional purchase moves him closer to ownership threshold that carries regulatory consequences. At a certain level, takeover rules can trigger mandatory offer obligation. Does it stop below the threshold? Does it push for board control? Does something structural happen at First Bank? One of these three are coming, and this is an important story we need to continue to track this month and see how it lands by the end of the year. The side effect for everyone else, First HoldCo volume is now so large. It was the single most traded stock on the exchange this week, and the Otedola story is eventually moving the banking index. When it stops, what will happen to the banking index is something we need to look at. The next 2 years, separate energy transfer of 10% JV interest to NNPC worth $281.6 million. We've spoken about this previously. The only thing for separate investors is that this is a material transaction worth monitoring to see how it shapes the company's revenue and cost structure as well as profitability into the second half of 2026. The next story here are the global stories. The first one is that the US Federal Reserve held interest rates unchanged. I ask, what does an American central bank holding the rate have to do with Nigerian portfolio? It has a lot to do, because when the world's largest economy pays 5% risk-free on government bonds, every global investor deciding where to put their money asks one question: does Nigeria pay enough extra to justify the additional risks? After the NGX have already delivered 7% this year, and they are currently the best in the world in US dollars term, some global money might be taking profit and going back home to invest in the US with higher gains if they're there. And the victory lap for Nigeria would probably crash, because although we have majority of domestic investors, but a capital outflow would negatively impact the market. The second story here is the Middle East tension, which we spoke about briefly when we spoke about ABC Transport, and they continue to hold the energy price elevated. If you remember at the last MPC meeting, the CBN named this as one of the primary risk factors for Nigeria, and with the fluctuating crude oil price, we are also seeing that our pump price have been fluctuating between 1,002 naira for PMS to 1,004 naira, depending on where you are buying for. These are two things we need to keep in mind, and this would impact the market eventually if they are sustained. Now, on the earnings reports, I spoke about MTN previously, and they had a revenue of 2.99 trillion naira for the half year 2026, up 25.9%, and a profit after tax of 707.5 billion naira, up 70.6%. Those are massive numbers for the half year, and with this projection, MTN's revenue for the year should be in excess of 5 trillion naira, and their profit should be in excess of 1 trillion naira. This profit is more than what most Nigerian companies generate in revenue in a decade. For additional context, MTN will be paying 622 billion naira in taxes during this period. Just one company producing such value. The question is, how did the profit grow by 70% when revenue grew by only 26%? The operating leverage has improved. Their costs grew by only 11.3%, while revenue grew by 26%, which means they are receiving more value for every naira of revenue that they are able to make, which is improving their profitability. We've also had the naira stable at about 1,380 naira to a dollar versus the 1,530 naira a year ago. That eliminates the foreign exchange loss that destroyed their earnings in 2023 and 2024. The biggest signal for all is that MTN declared an interim dividend of 26 naira per share, payable on September 7th, with the qualification date of August 20th, which means if you buy the stock today, you can benefit from this dividend, but do your analysis before purchasing the stock. The next company here is Dangote Cement, also producing a massive revenue of 2.51 trillion naira, which is an uptick of 21.4%, and a profit after tax of 638.5 billion naira, up 22.7%. Based on this performance also, we can also postulate that their revenue will be about 5 trillion naira by the end of the year, and the profit should also be in excess of 1 trillion naira by the end of the year. So, two numbers in this result we would like to highlight is that their Nigerian operations ran at a 60% EBITDA margin in the manufacturing sector. That is world class, with them able to reduce their energy costs and then driving down their production costs. The second thing is that Dangote Cement now holds a net cash position of 215 billion naira. Their excess cash exceeds their entire debt, which means they are a positive net cash position in a 26.5 interest rate environment. While some leverage companies are bleeding on interest payment, Dangote Cement is earning a net positive interest based on this their cash position. Also, the export story. The Nigerian cement and clinker export is up 62.3% to 20 ship dispatched to Ghana, Cameroon, and Cote d'Ivoire. This is a massive improvement for Dangote, with them becoming a West African cement company. We also have HBM Nigeria, that's formerly Lafarge, with the profits improving by 57% to 208 billion naira, and their operating margin expanding from 37% to 43%. That's 6 full percentage point improvement in just 1 year. The new acquisition seems to be working well, with them improving their operations, and they've also announced that they started work on their third production line at Calabar, which is a 3 million tons new capacity. Remember, we spoke about how this impacted Boa Cement last week, and under normal circumstances, based on Dangote Cement's report, they should have gained during the week, but we didn't see that happening. So let's look at how companies in this sector perform in the coming weeks. We also have Nigerian breweries with their revenue up 8.9% to 803.7 billion naira, profit after tax at 92.96 billion naira, and their profits grew marginally by 5.1%. The profit before tax grew by 18.2%, which means the tax charge was a major driver in their low profit margin, with the tax charge jumping by 44.6% under the new tax rate. And the real story here is that their balance sheet now has zero borrowing and has restored its retained earning back to positive. Those are two boxes the company must take before dividend can resume, and it seems the recovery is at the final stage, and the possible dividend payouts should come by the end of this year. Dangote Sugar is the next company, and for them, their revenue is down by 8.9%, but they have a profit after tax of 41.5 billion, which is a full turnaround from a loss last year. The earning per share swung from minus 2 naira to every share to plus 3.42 naira to every share. The naira stability has killed the FX losses that were destroying this company, and falling revenue for surging profits also means they've been able to improve operationally, and this is a positive note, but they also need to work on improving their revenue. So we have a couple of banks on our list, although you're seeing only Wema Bank here. We have Wema Bank profit up by 50.1% to 131.4 billion naira. We have Sterling Financials with a profit up by 20.4%. We also have EcoBank with a half-year profit of 408.8 billion naira. And then we have, apart from the banking sector, we also have United Capital with a profit up by 77.5% with a 66% pre-tax margin, meaning two-thirds of every naira revenue becomes profits. We have Name Insurance profits growing by 16.8% on lower revenue, which means underwriting discipline that supports everything we've said previously about the insurance service sector. We also have USN Nigeria with the revenue up 231% to 365 billion naira, and their profits up 172% to 20 billion naira. We can see that the Chi Limited acquisition is being consolidated into the number for the first time, and that has impacted the move in their margin. This brings us to the question, even though we've had good momentum in release, MTN profit grew 70%, Dangote Cement made 638 billion, HBM grew 57%, United Capital 77%, Rema 50%, but still the market fell. 56 stock decline. How does that make any sense? But there are three reasons we can give. One is that the market price expectation and not achievement. By the time these results were announced, every analyst had already modeled them. The result confirmed the expectation, but did not exceed it. Information doesn't move prices, surprises move prices. Worse, the great numbers now have very high bar for full year, which means the likes of MTN needs to sustain their growth. Dangote needs to sustain their growth. If not, we might see a decline when they report for the full year. The second reason is that we have global competition for capital, with the other markets underperforming Nigeria. Some investors might see this opportunity to move to those markets because the market doesn't always go in one direction. When some fall, the other rise. The other three is the mechanism. For example, on Thursday, we have a 2.1 billion section where people were selling. So when there are more sellers in the market than buyers, especially institutional sellers who might be rebalancing their portfolio, also linked to the last reason, when some companies have gained, they may want to take profits and move to other companies, which means they are selling the top gainers, which might lead to a decline, and then buying some other company. So these are mechanisms that might collide and affect the earnings in the coming week. And other things to also look at are the indices performance for the week. If you look at last week, the NGX premium index and the insurance index were the only sectors that were positive. The other index, the growth index, which includes small caps and speculative name, the banking, the services sector, the oil and gas were all negative for the week. So that's what happened in the market during this week. I believe some of the information we provided have been useful for you. August is set to be a fascinating month, and we look forward to receiving more Q2 earnings as the week comes on, and we'll be talking about that in the coming weeks. If you got clarity from this video, don't forget to subscribe on YouTube and follow us on all our social media platforms. Remember to send this to someone who always check the stock prices but never understand why they move. And this is how you are able to help him or her. Thank you for watching and see you next Monday.